All right, we'll get started. Welcome everyone to Buying Local. I'm your host, Mike Nelson from Five Towers Media. Joined today by the founder of Green Springs Companies, Brian Green. Brian, welcome.
Thank you for having me, Mike. Glad to
Yeah,
be here with you today.
absolutely. Appreciate the time. And we're also joined by Matthew No, the Five Towers. As some of you know, if you listened to one of our last episodes, Matt's going to be working in here to do some more podcasting with us and eventually take over the show completely. So, welcome, Matthew.
Yes, thank you, Brian, and looking forward to our conversation here.
Absolutely. So off and kind of give us a little bit of a rundown about Green Spring.
Yeah, I like to say that we are a development company. That's primarily what I focus on, but we're a real estate family of companies, right? So we do real estate development and investment services. We also own a property management company. We have offshoots that are in the commercial construction and real estate financial advisory fields as well. But Our focus primarily and how we started was, kind of just a real estate investment firm that was buying small, medium-sized properties in and around, I guess, the Saratoga County area to start. Originally, it was, just me, but then over time, the last 11 years or so, we've kind of grown it out to a whole family of companies with numerous employees and kind of different functionalities. But We are definitely local. We have offices in downtown Saratoga. We got a lot of different projects going on, and it's kind of hard to kind of keep my head on straight and focus on one of the companies versus all of them. But Hopefully, it'll make more sense here as we kind of go through the conversation here a little bit.
Yeah, yeah. One of the most fascinating things to me, Brian, about entrepreneurs and business owners is it always starts here and then grows into all these things, right? And it really is one of my favorite things because it's, needs arrive and pivots happen and markets change. I'd love to hear. So you started with the real estate investment firm, you said, and then it kind of grew and blossomed out from there.
Yeah.
What what was like the catalyst for that growing and blossoming and creation of other companies?
Yeah. I mean, full disclosure, when we say it started as a real estate investment firm, that was literally me just buying properties on my own for my own investments, right? So
Yeah.
I guess you can call that a firm, but eventually it was, it turned into that. I think the impetus at some point for it turning into something bigger was maybe just out of necessity. I got to the point where I had my first, I think, 5 or 6 buildings, and I was managing, I don't know, somewhere around 25 apartments, but I was literally doing everything myself. Everything from like, you know, analyzing the property from a financial component to figuring out the financing to drawing out my own lease agreements. I was doing the lawn work. I was moving the snow in the winter. I was painting the units during the turnover. Just because that's like the traditional version of what you consider to be a landlord. And
Mhm.
I was new to the business, right? So my previous career, I was in, retail. I owned a chain of Verizon stores for, 11 or 12 years. So that was what I knew. And I came into real estate after the sale of that old company, and I was kind of like just trying to figure it out. And I also had a lot of time on my hands because, I had sold the old company and I didn't have that day to day anymore. But at some point, it became too much. And it was obvious that there were certain parts of the business that I did not care for and I wasn't very good at. So I started outsourcing that stuff first. And then it just freed up my time to do more of the acquisitions work and more of the, high level systems and operations type work. Um, I'm kind of the guy that kind of likes to keep evolving and keep progressing forward. So as I keep coming up with new goals and new aspirations, it turns into, oh, well, what if we did this? And what if we did that? And maybe we should buy this building. And then like, all right, well, what does that look like? Who do we need to run that? And it iterates itself and it kind of turns into this, like you said, place where we are now. But that's when I first started, I just thought like, hey, we'll buy 5 or 10 of these and it will be great. And then we'll just sit around and make cash flow. And it turned into
Right.
something way different.
As you're saying it, like I
Yeah.
can I can picture the idea, right? I sold
Yeah.
my business. I need to do something with my time. Oh, I'll
Mhm.
just buy a couple of buildings, right? It'll be fine. And then all
Yeah.
of a sudden, 11 years later, you've grown it into this thing, right? Like
Uh-huh.
it's you do well, you know what they say, right? If you're either growing or dying. So it kind of becomes not even a choice at that point, right? You just got to keep moving.
Yeah, plus if you have that entrepreneurial drive in you and like you see that like even on a small scale that a business model works,
Mhm.
if then you're like, okay, well, what if I did this at a 10x higher level? Like the model still works, it's just bigger numbers and it's way higher returns for the same amount of work. So why wouldn't I do that? Right? I'm
Mhm.
always like, I'm very logic driven and very like, if test case it out and figure out the model. But once it works, like throw gas on that thing because it definitely works. As long as you can manage like the kind of the quality of life time constraint type stuff, which I think I'm pretty good at from, outsourcing and hiring team members. Um, it's impossible for me to see something work and then not go with it. You know what I mean? Like it's like,
Yeah.
it's impossible to like just let that thing walk by when you see and you know how to do it once you figure it out.
It's I'm curious, did you when you first started out, you were doing mainly like residential, like maybe single family or multi units, like 1 to 4 unit kind of
Yeah.
stuff?
Yeah.
And because I heard you say that, it kind of started off here, but it's like, well, I can do the same thing at a bigger level and
Mhm.
10x. So I assume that means that in the beginning it was 1 to 4 units, and now you've moved into larger properties as well.
Yeah, only yes. I mean everyone at this point we've got team members and partners and they're always, reiterating to me it's just as much work to do this 50 unit apartment building as if you go buy a duplex. So like stop
Mhm.
buying the duplex. It's one of those deals, right? Because you're just giving us more work to do for less, for the same return.
Yeah.
So yeah, I mean, ideally, it's scalable, right? So like, but it's the same process over and over. You're going to do the same process for getting something under contract, and underwriting is the same, and the due diligence process is the same. The financing is a little bit different, but mostly the same.
Mhm.
Managing a tenant doesn't matter if there's 4 units in that building or 40, it's kind of the same thing. But the advantages to that management expertise or that, underwriting expertise are all magnified when it's a bigger number, right? So like, if you're going to make a 20% return, if you're doing that on 100 grand versus 10 million, it's a whole different ballgame, right? But you're doing the same thing. It's the exact same work. As long as you can kind of manage and, mitigate and become comfortable with the risk profile, I think it just makes sense to go in that direction.
Do you still own any of the properties that you bought way back when with some of those first properties, or have they all evolved since then?
I've sold some of them. Many of them though I still own because we can kind of get into it. But our model is like a heavy value add type of strategy where we're going in, we're doing major renovations and construction. So if we buy something, very soon thereafter, it's in very much like new condition. So once it's new, it kind of operates on its own. It's got very low, repair and maintenance type of stuff. It's kind of on autopilot and it just keeps appreciating. So at that point, it makes a lot of sense for us to keep it. I mean, when we buy something, we're always looking at like a 10 plus year hold. So, I mean, those buildings were all renovated and new, so it's hard for me to kind of give them up unless I have an opportunity to sell them and roll it into something bigger,
Yeah.
which we may get to. I do have, it's been maybe 7 or 8 years for the many of the ones I still own, the first couple. We have a couple of those in downtown Saratoga that we're in the process of doing condo conversions on, only because we've kind of exhausted the value of that property running it as an apartment building, but it's worth, maybe 2 times more if they're condos. So, just on a small scale, maybe we'll exit those properties, selling them off as condos instead. So, we kind of get creative with it, but, um, we're long-term hold type people. So, it takes a lot for us to move off of it.
Yeah.
Yeah.
I so many questions I have as you're speaking. On one side, I want to ask about some of those pivots in response to market changes, like you just mentioned, of going from like a standard apartment to a condo. I also want to talk about the overall model that you have.
Yep.
But you also kind of mentioned, and I just want to touch on this real quick, the idea that, whether you're doing a 4 unit or a 40 unit, it's relatively the same steps, right? The same work, just at a different scale, we'll say. I'm curious to know if you are a big process guy. Like did you have processes in place for like the 4 units that you were able to kind of adapt for that larger model or for that larger unit?
Yeah, I mean, at first, sort of. I mean, I was just kind of figuring it out on the fly. I do a ton of reading and listening to podcasts and stuff. So, at this point, I've definitely got my probably 2x my 10,000 hours I need into this thing. Just through those type of mechanisms and on, on the spot kind of delivery when I'm doing these properties. But yeah, I mean, it depending on what I'm doing, there is checklists, there is things like that. But I feel like I'm okay at doing that. I don't like doing that. So like the other part of scaling is if you're scaling to that 40 unit building instead of that four, and the profit margin is still that 20%, well, you can do the process, and now you can afford to bring on team members that are better than you at certain aspects of the
Mhm.
deal than you are yourself, and or you can outsource the stuff that you don't like to do or you're not good at.
Yeah.
Whereas if you're doing the four unit and you're still making 20%, that sounds great, but you don't have enough total revenue there to have those team members on board. You got to do it all yourself. So that's the other advantage I found to scaling is then you can bring on partners and you can bring on high level team members and you can kind of just niche into the stuff that is really good, and your real value is kind of shown.
Interesting.
Yeah.
Okay. Um, and again, I think you and I may have talked about this in other conversations that we've had over the last few months. But for 6 years, I had a property management company, and like
Mhm.
so, when you were talking about kind of your early days, right? Of you're doing doing the painting, doing the renting, doing the lawn.
Yeah.
Like, I was in that for like 6 years, and I remember it very well. And I unfortunately was not able to. Well, I ended up selling the business itself, but and got out of it entirely. But I certainly was not able to accomplish what you have been able to accomplish, and so it just makes me really curious about the whole model and everything that you're doing.
Yep.
And maybe that's a good segue for us to talk about your model and to kind of tell us a little bit more about how you operate and who you work with and kind of how all of that functions together.
Yeah, so now, we've been doing this, we're in year 11 or 12 here. So now we have four companies, four main entities. One is Green Springs Capital Group, which focuses on real estate development and also works with a lot of we bring on, it's kind of a bigger conversation, but we bring on now private investors for a lot of our projects, the bigger stuff we're doing now. So Green Springs Capital is the one that manages that investment portfolio and works with those individuals that are basically the money side of a lot of our projects, as well as going out and sourcing deals, underwriting, and kind of putting the whole thing together through municipal approvals and financing and what have you. So that's the kind of the top company, and then we have Green Springs Property Management, which is, to be honest, probably the most important one because that's managing the operations of the properties.
Mhm.
I can have the greatest business plan from a developer's perspective all day long, but if the actual property is not managed, for optimization and according to that business plan, the whole thing kind of falls on its face. So the management company, which I still run today, is also extremely important, and they primarily only manage for ourselves. So they're managing only Green Springs Capital properties for the most part.
Mhm.
We are kind of tipping our toes in the water a little bit to do some outside property management for third-party companies, mostly focused on like the maintenance side of things versus the
Mhm.
leasing. But that's kind of a new thing for us. So primarily though, they're managing in-house. And then we also have a commercial construction company. So forever we did construction internally, and one of my partners is my brother, and he was running that construction team internally with some other team members within Green Springs Capital Group before. And then 2 years ago, we spun it off into it's called CG Construction Group. We brought on another partner, which had some, tremendous experience in construction. His name is Matt Crudo. So now the two of them lead the commercial construction company, and they're doing all of Green Springs construction projects, like our new developments, and they're also doing third-party construction. So, right now the big project is they're building the extension on Glens Falls Hospital.
Oh,
They
wow.
built the new Ted's Fish Fry on Route 50. So they're doing a bunch of other stuff other than Green Springs Capital, but their capacity is unlimited, right? So now it kind of gives us at Green Springs, when I'm looking at projects, no longer do I have to say like, oh, this probably makes some financial sense, but I don't know if we can execute, right? So now I know that from a construction perspective, there's no limitation. And then the fourth company we have is a real estate financial advisory firm specific to real estate developers and investors. And they also serve as like a commercial mortgage brokerage for those people. But mostly what they're doing is they're giving like asset management advice. So they're
Mhm.
reviewing their portfolio. They're kind of looking for ways to optimize it, looking for strategic ways to change around the financing to increase their cash flow if that's what they're looking for. They do some consulting work, a lot of it actually on construction consulting. So like helping people that know how to build also put together the financial pro forma behind that construction, so it still makes sense from a project perspective. There's a lot of builders that know how to build, but they don't know how to math it. So like,
Yeah.
you know what I mean? So like we're doing the math for them to make sure that like this is a solid project, this does make sense, go ahead and build it, and this is the financing path. So it's kind of a unique business in the market. It's kind of a niche, but it's an extremely valuable company. It's actually probably our most profitable at this point. So we have those four companies, and they're all kind of servicing our projects. And they all have their own leaders and their own skill sets, and that partnership kind of overlaps between a lot of those companies with shared ownership. So we kind of created like our own vertically integrated ecosystem,
Yeah.
just with different entities instead of having everything under one umbrella.
Interesting.
Yeah.
It, so I'm curious. Well, again, I have a bunch of questions, and Matt, if you got it, you'll find out, and Derek Foster, that's my co-host on Blue Collar Startup, could tell you too. Like, I always have 1,000 questions, so if you got something, you could just got to jump in. You got to like,
Yep.
don't even raise your hand. Just be like, Mike, stop talking. I have a question.
Yeah.
Um, but my other question, or one of the other questions anyway, is you're talking about like with the construction company and with the property management company, and initially you were only handling internal stuff, which
Yep.
obviously makes sense, right? Because if it's your company, you're going to be able to, it's going to be less of a liability for you than if you were going out to a third party. Um, However, it still is a liability though, right? So you talked about kind of expanding and going out and taking on other clients for those two businesses. Is that part of a plan to turn that liability into an asset, so to speak, or is there other things behind it?
Some of it is, well, there's a couple different angles to that. One of it is, in order for me to get the high level partners that I want, they have to be owners.
Okay.
And so bringing on or creating those companies, right? And putting them in an ownership position, um, is one of the ways to do that. Because otherwise, these people would not be somebody that's just going to come work for you, right? Like, so they need an ownership stake. One way to do that is to create its own entity where we're co-owners, but like, so you're getting the upside as well as, kind of the cash flow and the kind of the ongoing rewards for this business, right? So everyone's an owner versus you have, that's a different situation than if you have an owner and an employee, right?
Mhm.
It just is. So that's one reason for it. The other reason is, um, if any of your listeners know anything about real estate, it's not a cash rich business. It's a asset rich business, like, so like your balance sheet will keep increasing, but you are perpetually cash poor. So one way that my brother and I, who were the first two partners, um, tried to kind of leverage that was we basically traded asset value for cash businesses, right? So like in those partnership agreements, we basically came into it and said, all right, well, we'll be willing to give up, a share of our portfolio right now and into the future. And then in exchange, we'll help you set up these new companies and, your companies will be service businesses that generate a lot of cash and our company will, generate, equity and appreciation in these assets, right? So all of
Mhm.
our balance sheets go up and all of our, cash positions are going up simultaneously. But it was basically without those service businesses, it's a very difficult business to keep doing because you're really not making much day-to-day cash flow. So
Yeah.
that was kind of a strategic move on our part. And it worked in all three respects, right? The cash flow increased, got high-level partners that came on board, and now we also have the internal skill set and capacity with these high-level people that they can execute on any financing we need, any financial analysis we need, any construction project we need. So like it worked for everyone involved.
Yeah. It's it sounds like an amazing strategy to be fair, like not to blow smoke or anything, but it's like it really, to your point, you got to keep feeding that machine on the real
Yep.
estate side, right? And
Mhm.
you need a way to do that because it's like I don't know, it makes me think of like dividend mutual funds, right? Like you buy a bunch of mutual funds and the value keeps going up, and so on paper you look like you're doing really well, but that little dividend that comes back each month or quarter or whatever really isn't
Yeah.
enough to eat off of unless you've got a big portfolio. So it's an interesting way to solve that problem.
Yeah.
Um, And and this kind of goes back to responding to market conditions. It sounds like you guys are very good at responding to market conditions and figuring out either the service addition you need or the pivot you need to make in response to that. I'm curious of how do you have a crystal ball? Do you got
Now,
using Chat GPT? How you?
some of it is just born of necessity, right? I mean, so when we're planning out the trajectory of the business over the next 3 to 5 years, and we have, these fairly aggressive goals, if we get into a situation where the market is difficult, right, or it's hard, I'll give you an example. So like 2022, 2023, prices were extremely high coming out of COVID on commercial real estate. But owners, but valuations, real valuations probably were 10 to 20% less than what everyone thought their properties were worth, right? So you had this disconnect between owners and buyers, like in the marketplace. So nothing was moving, right? They didn't want to lower their price. I knew it wasn't worth what they thought it used to be worth, right? So like they were slow to like take the haircut that the market was demanding, right? So nothing was trading. So like if that happens and nothing's for sale or you can't buy anything at the right price, what do? Right? Because like you still have these growth targets. You just sit on your hands for 2 years and do nothing. So like our solution to that was like, all right, well, something must make sense right now. What makes sense right now? And what do we do? So like for us, the thing that made sense was pivoting into historic properties, right? Because historic properties have government incentives, they have historic tax credits, they have all these other financial instruments that make them more attractive, even if the pricing might not be perfect, right? So I think the last 5 projects we did were all historic renovations to varying degrees, whether it was a 10-unit building here or we just started doing a new one up in Glens Falls that's a 20-unit. Both of those are historic though, and the tax credit element and figuring out that how that works and how we can return those to ourselves and to investors to make it pay off was just kind of the pivot we needed, and it allowed us to keep expanding even though nothing was really transacting.
Yeah.
Yeah.
How does one go about learning all this stuff? I mean, this sounds very sophisticated, and you're like you'd said your background of. I mean, does any of running those Verizon stores translate to what you do now, or
I
is this
think
just something that you just kind of figured out along the way over the last 11 years?
I think it's just that. It's not like an expertise. It's just like having the capacity to figure stuff out. Like,
Yeah.
I know this makes sense. There's got to be somebody else that's doing this. How do I get a hold of them? How do I, how do I have coffee with them? How do I pay a consultant to help me with this? How do I, who knows how to do this, right? And you just kind of say, keep asking a bunch of questions, kind of figuring it out, talk to the right people, and then you can kind of put it all together and say, like, all right, this makes sense. Let's do it. Um, I think it's just kind of that, like that. It's an entrepreneur thing. It's like you got to have the persistence. You got to like never stop when you hit like the blockade or somebody tells you no. Like you kind of have to. There's always a way to figure it out. Like just keep pushing forward, be persistent, figure the thing out, and then in the end, you got to have the confidence, I guess, of your own convictions to say like, all right, I know enough now to do it. I don't know everything, but like I know enough, and I have the right people on my team. So let's go. Let's go do this. And I think that's just, any successful entrepreneur has to have that trait.
It's interesting that you say that because I was just in a conversation this morning with Bill Tanzi from the OpEx shop, and we were having that conversation of the difference between an entrepreneur whose job basically becomes problem solving all the time, right?
Hmm.
Like that's what your job is. Doesn't matter what
Yep.
the industry is. It's
Yeah.
you're being and then there's the people that don't want to have anything to do with that and they just want to do the stuff. They just want to do the thing, right? And what a part of that conversation was that you really have to enjoy overcoming the obstacle when it's put in front of you. Would you say that's fair?
Uh, Generically, yeah. I mean, there's certain obstacles that I'd rather not tackle, but yeah, I think that you have to, I think taking it a step higher than that, you have to enjoy being the person responsible for solving the problem, right? You might not like the problem, and a lot of times they're annoying or it's kind of a distraction, but you have to enjoy having the responsibility and um, expertise in some level and the risk taking kind of it's not like it's when you say risk, people are like, oh, it's it's like gambling and all this stuff. It's not that. It's like calculated risk, right? You got to be comfortable in that position. And most people aren't, which is why most people don't open their own businesses or become successful in doing that, which is fine. It takes a certain personality profile, I think, to do that. But yeah, it's when everyone else can't figure out the problem, guess where it goes? It goes right up to you, and then you have to solve it. And if
Yeah.
you don't solve it, like what people don't get paid, or you don't make any money, or the whole thing, you don't pay customers invoices. Like you have no choice but to figure it out, and like you have to be able to embrace that at some level.
Yeah. And I'm sure in a little bit of enjoyment, maybe.
In the payoff when you
In the
solve.
payoff, yeah,
Yeah,
that's
yeah, 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 yeah.
and that's the thing, right? Is
Yeah.
it's not sometimes like you said, sometimes the problems are annoying or just like awful and stressful. But when you
Mhm.
get to overcome them, it's like that hard fought one, right? Like
Yep.
when the win is over a really good opponent, it's very sweet, right? And when it's
Yes.
just an easy win, it's kind of like, yeah, whatever, no big deal. But
Yeah. And it's, in a former life, I played football in college, and that's a different opponent. This opponent now is mostly like, zoning boards and bankers.
yeah,
Yeah, so it's a different playing field, but I guess it's where my competitive kind of inclinations have lied.
yeah. I'm curious about earlier in the conversation, you talked about turning the apartments into condos,
Hmm.
and that in response to market conditions and what is going to be a better decision for you now.
Yep.
The Obviously the real estate market is just such a weird thing always, and the
Mhm.
last 5 or 6 years have been very interesting to see and be in. What do you see happening right now, or what's going on right now with the real estate market that is of note?
Well, there's not enough supply. So that's the problem. We're not building enough houses. A lot of that has to do with high financing costs over the last several years. A lot of it has to do to, um, what should we say, overcomplicated zoning at the municipal
Yeah.
level and approval processes, which is the main culprit, which everyone seems to ignore. But no matter what the reason is or what you want to blame the reason on, there's not enough supply, right? So prices keep going up. It's not affordable for people to buy entry-level homes at this point anymore, if there is even a such thing as an entry-level home. I think I saw that the average age now for the first-time home buyer is 38 years old, which is
Yeah.
in the early 90s, it was like 26. So like in the last 25 years, we've managed to mess this thing up severely.
Yeah.
For me, as a person that owns housing, right, and is in the housing business, um, you know, if I'm looking at an apartment building, I can only charge so much in rent for those units, right? And if whatever I charge on those, there's a direct correlation between what then the value of the building is. So knowing though that condominiums, right, might suit an entry-level home buyer if they're priced correctly. If you have a 3 or 4 unit building and it might be worth $800,000 or $900,000 as an apartment building, if you turn them into condos, you can sell each one for 400, 450, 500,000, which is still below the median here in Saratoga.
Hmm.
Um, then your property might be worth 1.3, 1.4 million just by converting them and selling them off, to home buyers instead of to
Yeah.
renters. So, that it's a better exit plan at this time in the market. There's other times where there's plenty of housing, right? And it hasn't been recently, but there might be other times where there's plenty of housing and the demand for condos might be really weak, or that model might not work in a different municipality. Like you probably can't go to Glens Falls, 20 minutes up the road, and try that same thing because condos don't have the same demand and
Hmm.
houses are more affordable, right? So like you can't do the same thing there. But if you're in downtown Saratoga where there is no housing and it's very expensive, then that strategy might work. So real estate is very local, like zip code to zip code differences, right? So that's kind of why we came up with that strategy on those couple small buildings.
Yeah. So fascinating.
Yeah.
And that strategy could change, right? Depending on what the
Sure.
market is. And
Yeah,
it's
and of course, like I said about zoning, right? It takes a year for New York State to approve a condo conversion, right? So I start the process this fall. By the time we get to next fall and they decide that they're going to approve this, the whole market could be completely different, and who knows what it looks like. I'll
yeah.
probably still be fine because the worst case, I can keep renting them out as apartments, but you have to kind of make a calculated estimate on where things are going to be at some point in the future.
Yeah.
Yeah.
Yeah. So crazy, man. But and that's where that right that risk is. Although, how do you describe it as like a calculated risk, right? Like
Mhm.
you're, I'm sure you're taking those things into consideration as you make plans and look at future markets and changes. Um, what a fun game.
Yeah. It is.
Not to
I
call
mean,
it a game,
and
but
business is a game, right? It's a game with consequences, but rewards, but it's a game. You got to figure out how to move the pieces on the board and make the right decisions at the right time.
yeah. So obviously a lot of growth over the last 11 years and constantly expanding and growing. And, even like on the commercial construction side, I mean, you guys are not doing small projects from the sounds of things. Those are some
Correct.
pretty large construction projects. What does the future look like for Green Spring companies?
Yeah, each of the entities has their own kind of financial and like I guess performative goals.
Hmm.
But speaking to Green Springs Capital, which is the one I'm most focused on, the goal is to get to 200 million in assets under management by 2030.
Okay.
As of the end of this year, I think we're just slightly shy of 50 million assets under management. And keep in mind, assets are all we own and manage all of our own stuff, right? So like this isn't like we went out and I got an agreement to manage some 200 unit complex that somebody else owns. Like, so we're owning and managing pretty much everything. So we want to get to 200 million by 2030. Um, and the reason we came up with that number is not just because it's a big, fun looking number, although maybe it is, but
It is, yeah.
I kind of went with like, hey, we have the vision of like, I want a leadership team, whether that's my partners or other people leading these companies, that's probably somewhere in the range of 8 to 10 individuals. And we want to be able to pay them, representative, salaries, right? So like, how big do we need to get in order to get to a level where we can pay all 8 of these people $200,000-300,000 a year? They all are participating in some sort of bonus program with equity in our properties, of $1 million plus, in cumulative total over the time of their working career for us. And what does that mean for all of their families and everyone else that kind of works down the chains, right? So, um, that's the way I kind of plan it out. Like, where do we need to get to from a scale perspective to make sure that we affect this many people, I guess, within our company structures, right?
Yeah.
Um, so it's not necessarily, it is the money thing, but like for us, money is like equating to freedom, time, like flexibility, like all those things you're pointing to, and it's different for everyone. But we kind of want to build that ecosystem that allows us to impact all of their individual families and they're like, their extended families and whatever that means all the way down the chain from our company. But that's kind of where we ended up getting it to. And then, of course, if we meet that goal, then we'll probably just push the line further and see where that goes.
Yeah. You're either growing or dying, right?
Yeah,
Like,
I mean, depends on how much or how long we want to keep, throwing gas on the fire here and seeing where things go. But we're all fairly young, so we got a long runway ahead of us.
yeah, yeah. All right, last question I have for you here, Brian. It, it, is there one question that you hoped I'd ask that I didn't ask?
Hmm. Um, Maybe why we pivoted from um, wholly owning everything and kind of self-funding it to working with individual investors because that's a whole different business model.
Yeah,
Maybe that's one pivot that I think most real estate developers um, don't get to, I think, like, because you have to get to a certain scale for that to make any sense.
mhm.
Um, but had you asked it to me, I would have answered by saying, really it kind of extends out to what I just said, right? When I say like we want to create financial freedom for the people on our team and our partners, that extends out to friends and family, right? And most of our investors are friends, family of ours, like our partners. And we want to kind of give them a platform that allows them to participate in what we know to be the best investment vehicle that we have found, which is real estate. Because normally they wouldn't have access to it, right? Or they don't have the time, or they have full-time jobs. Like they don't want to go out and be a landlord, right? So if they partner with us, we basically do all the work and they get the benefits, right? Um, and then also from our perspective, it allowed us to do bigger and bigger projects because at some point, our personal balance sheets weren't big enough to kind of accommodate some of these projects, right? So we have to how do we make this work for everyone where we can kind of keep doing bigger and bigger deals? And now we can give this opportunity to our friends and family to kind of come along and ride with us. So that's why we made that pivot. And on certain projects, we bring on kind of limited partners in our deals, although not on all of them. It's kind of a project dependent thing. But there's the answer to your question that you didn't
All right.
ask.
Yes, I'm glad I asked that question. Brian, if people want to learn more about you, more about Green Springs and all the things that you guys have going on, or maybe how they can get involved, where do they find you guys?
Yeah, I find this our website, which needs a little bit of an update that Mike's working on or is going to work on. It's greenspringscapitalgroup.com. You can also, you can simply just send me an email. It's brian@greenspringsco.com. Happy to have a conversation if you're looking to get into real estate or, just have questions on being an entrepreneur or business, what have you. Always available, like to have those conversations.
Amazing. Love it. Thank you so much for coming on, Brian. I really appreciate it. Appreciate you taking the time out of all those things that you got going. Uh, it's I mean we know each other and we've had conversations, but I guess I didn't understand the full scale of all the things that you've got going on. So it sounds pretty great.
Well, thank you, Mike. Appreciate the platform. And Matt, next time we're going to get you a question.
And of course, thanks everybody for listening. You can find these episodes and all the rest of our episodes at buyinglocal.us. And of course, we publish our podcasts on Spotify, Apple, Rumble, and YouTube. Appreciate everybody listening, and you'll hear from us next week.